Hey guys, Shayla Gifford here with Guild Mortgage. Wanted to send you an update on what the heck is going on with the market and how that affects our business, our buyers, and our personal behavior and business plan. You know, I've been doing this for about 12 and a half years, and every time the market takes a sharp turn like it has in the last couple days, I've felt this horrible anxiety and stress and frustration and fear because I think and worry about all of our home buyers and our clients that are currently in escrow or have been just pre-approved and what that might mean for our job security. And this year I just determined that no matter what the election results are, no matter what's going on in the economy, I'm not going to let it make me anxious. Because every time I've had the anxiety, it always works out. And I've been through it many, many, many times. The market will spike one way and then it'll slowly come back around. It'll even out. And it just wasn't worth all of the ulcers and partial heart attacks I was having at the office. So here's what's going on. Rates have ticked way up in the last 3 or 4 days since the election closed and Trump became the president. Right now, the world markets and U.S. equity and bond markets are showing that people are very bullish on the stock market and the economy. What that means is they are rushing to buy stocks and invest because they think that there may be more opportunities and money to be made in the stock market. They're not so fearful of risk at the moment. What that does is it messes with our bond market. Anytime the stocks do really well, then the bond yields come up, which makes our interest rates go higher. Okay, I will tell you that we need higher interest rates. These rates have been far too low for too long. When there's not enough high enough return on mortgage lending, all you've got is government money. And that's what we've been playing with, folks, for a long time is FHA, VA, conventional rates. Once returns or rates go up, you start seeing more money, more investors flow into the mortgage market, and we get more creative products and we get a more healthy return for long-term investors to play in this space. So the other thing it does is it creates urgency. I don't know about you, but for the last year with the market completely flat for the most part, little tiny dips, people have not had urgency. They've all said, well, I'm kind of waiting for this or I'm kind of waiting for that. I will tell you rates jumping up a half point, and I'm not saying that's exactly the case because it's like minute by minute at the moment, but any kind of significant enough rate jump will get people to move faster. Look, we've got to remind people, even if the rates are in the mid-4s or the mid-5s, that is still ridiculously crazy, historically low. Rates in a healthy economy for mortgages should be about 6.5%, 6.75%. So we need to influence our buyers to get in the market now. I want you to know that I'm very, very proud of my team this year. We called all of our existing clients in the database. We have over 3,000 past clients. And all of those people that were in the money to refinance, we hounded them and I emailed them and I worked out payment scenarios for them because I really, really felt that we're finally on the verge of rates going up. And I feel really good that I helped hundreds of families save money on refinances before they may have lost that opportunity. So what does that say about the future? Even if people close at a higher interest rate now, there will be dips in the future. Economies go up, economies come down. We have booms, we have busts. Even if they close at a higher rate today, I will always be looking for opportunities for them to refinance down the road and always make sure they're in the most efficient mortgage product possible. So it's our job to get in front of our clients, to get in front of our friends and family, to get in front of the community and get people off the fence. If they have wanted to upgrade or get into a better school district or relocate here, or maybe they transition here for a job, but they're currently renting, now is the time to get moving. Do I continue to see that rates will continue to climb? I don't think so because the market is emotional and I do think things will calm down a little bit. But overall, I would expect with the Republican sweep in all the areas that we've had that rates will continue to go up. They've been far too long for too long, far too low. They've been subsidized by quantitative easing and all kinds of government intervention, and the economy is much, much healthier than mortgage rates would suggest. So hopefully this has been helpful. If you need additional scripting or you need help or you need me or my team to call and talk to your clients, we would love to do so. Have a great day, and please join me November 30th in Reno, Nevada for our annual goal setting session. Whether you own a business, whether you're a real estate agent, whether you're a broker, whether you're another lender, I would love to have you. Goal setting and business planning is the most critical thing that we do. 9:30 to 11:30 the Wednesday after Thanksgiving. Have a good day.